Now we have Chris Overholt, the CEO of OverActive Media, joining us with what looks like what might be the snazziest setup of the day behind him. Really impressive.
Well, thanks a lot. It's our Red Bull studio from here in Toronto, so pleased to be with you, Mike.
Looking great. Chris, it's a pleasure to have you here. If you have your presentation teed up, let's get it on. The floor is yours. Take it away.
Thanks very much. I'll just jump it here. Can you see that?
Not seeing anything. There it is. Yep, popping up. Looks like we're good to go.
Terrific. Well, again, thanks for the time, and excited to be coming to you again from our studio here in Toronto. I'll start by maybe offering a little bit of my background. 25 years in professional and Olympic sport. I started my career in the early days of the Raptors in '96, and then moved down to Miami to run the business of the Florida Panthers. And in the years that followed, over to the Dolphins to run the sales and marketing. Was recruited to come back to Canada to be CEO proudly of the Canadian Olympic Committee for almost 9 years. And I start there because contextually it's relevant to the company that we're building. The sports background that I have and that others inside of our organization bring is very relevant to what we believe is the future of sports, media, and entertainment, rooted in the investments that we've made in franchise leagues inside of competitive esports. So I'm going to spend the next 20 minutes or so just talking to you a little bit about the assets that we've acquired in the most important esport leagues in the world and the vision we have to build a 21st century sports media and entertainment company for today's generation of fans. So, of course, with the aspiration to build a world-leading company, all of that can only be made possible by a great team. And I think it's important to investors to consider, of course, any management team behind any startup organization, and ours, I would submit to you humbly, is one of the, if not the world leading organization in that context. My background, as I just explained, brings all the relevance and context of professional Olympic sport to our business practice. Adam, our chief strategy officer, early stage venture capital and investment banker for years, brings that keen eye to the possibility of acquisitions in a consolidating market. Allison was with me at the Olympic Committee and moved on to work for Maple Leaf Sports and Entertainment and later for Bell Media. Rakesh and Tyler, again, I have a history with all of these folks in one way or another. And again, their experience represented in our industry brings all at once terrific seasoning and qualified pedigree to an industry that is taking shape and is led, again, by, I would submit, the strategy of OverActive Media. So what is our business? Well, today it is taken root in its origins in the esports space. We have made targeted investments in the biggest and most important leagues in the world to acquire franchises inside those leagues. And so the biggest leagues are Call of Duty, Overwatch, League of Legends, and Flashpoint. Again, biggest game titles, biggest followings, and now over, in most cases, more than 10 years. And the model that we've invested in looks no different than the NBA or the NHL or the NFL. It allows us to acquire a franchise, own the bottom-up opportunity that comes with developing that franchise in a local market, building out fan base, nurturing live event, selling sponsorships and licenses around that IP, and at the same time, sit inside the enterprise value of the leagues as they take shape, and enjoy a revenue share position as a core franchise holder in all of what we do. So just like the NBA's Raptors or the NHL's New York Rangers, we get to sit inside that enterprise value. And as those leagues do sponsorship deals and broadcast deals and media rights deals, we get to share pro rata in that revenue. That model of enjoying a franchise position and owning that position inside the league is unique to these four leagues. And we are, in fact, as OverActive Media, the only company in the world that owns a position in these four leagues today. And so in that way, just like MLSE here in Toronto or Madison Square Garden in New York, we are building out our own version of our 21st century sports media and entertainment company for today's generation of fans. A generational cohort that frankly doesn't spend 3 hours watching football on Sundays, but rather would be more inclined to be watching their favorite streamer on Twitch while they're watching their fan community on their mobile phone and maybe engaging with an esport off to a second screen. That is the business of today. That is the media choice today of this generation of fans. And that is where OverActive Media is firmly positioned to lead in a growing industry. Just like these companies, we're producers of content. We develop and nurture marketing partnerships and sponsor business that, again, is a very significant revenue stream opportunity for us and a high gross profit, gross margin revenue opportunity. And just like these two organizations, we are currently taking steps to build out a strategy to launch ourselves into the entertainment space. We have now, for most of 18 months, been working on developing a file and an opportunity to build a 7,200 seat performance venue here in the city of Toronto, a venue that will arrive to now the 4th largest market in North America, and in fact, the 5th global market for music and entertainment. This venue, as it's imagined, has not been seen in this country or in this city, and will give us not only a bold step into the entertainment space, but a chance to compete every day, every week with Maple Leaf Sports down the street for the premium music and entertainment acts that land to the market. So more to come on that a little later in the presentation. As I mentioned, these are the biggest game titles and, in fact, the biggest player bases in the world. 240 million players around the world that play Call of Duty. Think of the Call of Duty League as the highest expression of that game played competitively. It would be considered again, as compared to the NBA and the NHL, again, where the best players land to play, with 240 million players of all description around the world. The best 60 players in the world play in the Call of Duty League, and the same would be said for, again, Overwatch, League of Legends, or Flashpoint. Our business in a snapshot, again, we've got this proprietary position inside these franchise leagues. We own, as I say, the respective markets that we operate in. We have that exclusive and unique relationship with the publishers, and it affords us, again, to build a local business while we're enjoying the enterprise growth of the leagues. We're in the live and digital live content space. We produce content for ourselves to promote our players, our team brands, and so on. And we're also in the original content business as well. We build out brand marketing positions and sponsorships in strategically the same ways that Maple Leafs or the New York Rangers would do so for their partners. And we've had tremendous success with that very seasoned team that I mentioned, attracting now more than 21 global partners to our business, both here in Canada and overseas in our European base in Madrid. And again, we're working on developing our venue strategy that should land us squarely in a place where we can choose to put a shovel in the ground as soon as next year, with a scheduled completion date in 2025. It's important, I think, to take stock of just the way this industry is growing, and I'll just spend 2 or 3 minutes on a couple of slides here. Again, since its early stage origins, you've watched this industry grow at double-digit CAGR, and it is predicted to continue to grow that way in the meaningful years ahead. On the right side, you'll see the revenue streams that typically support the esports space, driven largely by sponsorship and media rights. We, in fact, expect that the media rights business will continue to grow, and as it does, probably soon become co-equal with the sponsorship space. The reason it's important to understand those two revenue streams is because unless you're invested in these franchise leagues as we are, you will not get to share in the most meaningful revenue streams that exist today in the space, because it's the leagues that are in fact doing the biggest sponsorship deals and the only media rights deals. So let me say that again, unless you're invested in these franchise leagues with the teams that you own, then you can't enjoy the biggest revenue streams that are afforded to the space. And so again, we don't own just one of these teams, we own 4 of them. And so we feel pretty good about our position in that context. There are a number of revenue streams that contribute, but certainly the one to keep its eye on is the digital stream, relatively nascent in a number of ways today, but certainly as we see the advent of cryptocurrency and the blockchain, as we see digital merchandise and skins take root in this space, we do expect to enjoy sizable gains in that space. And so, specific to OverActive Media's business, I think it's important that we talk a little bit about the nature of the revenues that we gather up. Again, the media rights and the rev share that we take out of these leagues is super high margin revenue for us. It doesn't cost us $1 more to accept our share of the check that goes with being invested, just like the NBA or the NFL. Our partnerships business tends to run at 85–90% gross margin, and events and content, again, in the mid 50s to high 60s. And then our licensing business, again, we're not a business that takes high risk with inventory. We tend to license our products and take our points off the top at 100 cents on the dollar. Said directly, this is again a high gross margin business that runs north of 80%, and it's that gross margin ratio that's growing our business on the top line and effectively on the bottom. We're focused on speaking to this generation of fans, the 18 to 24, that is predominantly in this space, that spends time and attention on platforms like Twitch and Twitter and YouTube, and really is quite fickle about the time that they spend online. Again, our business is rooted in the assumption that the emotional connection, the connection that we draw to our teams, to our players, as is true for professional sport, builds an authentic and emotional connection with our audience that allows us to charge a premium for it. We do that again through our sponsorship and licensing and content business. This is different than the ad tech side, whether it be on the demand or the supply side, whether you're landing ads onto websites or pushing them into the space. That business tends to be largely ineffective with this cohort. It tends to be a difficult relationship to build in that very transactional way. This age group, this demographic really values, again, that strong emotional connection to everything that they're engaged with, and values brands that invest in an authentic and land authentically. It's also a different business. Again, our gross margins running as high as they are, where the ad tech space tends to run in the mid to high 20% gross margin. So again, very different approach to the business. While nobody in this call would be signaling the demise of traditional sport, it is the case that the average age of our esports investments is considerably lower, and in fact sits squarely in the target market that the brands and media rights holders are looking to attract and retain. These are global leagues in their orientation. As a fact, Overwatch has 4 teams in China, 1 in London, 1 in Paris, 1 in Seoul. These are global leagues, and so scale a global audience. And similarly, they are native digital in their orientation, and so scale again more efficiently and more cost effectively. At the bottom, you'll note a study that was completed by Nielsen in 2019, and the origins of that study were focused on, again, the 18 to 34-year-old demographic. It noted that in 2019, the Overwatch League was in fact the fastest growing league among that 18 to 34 demo, as compared to all the other major leagues that we've known to come and to love. Again, the Overwatch League as an expression of the esports business is a glimpse of our future. And this is the business opportunity, in fact, the crux of the opportunity as we saw it. Again, in 2017, we noticed the slide, and we maintained it in our presentation because it's as relevant today as it was in those times, perhaps even more so. But in 2017, we noticed that the growth of the global esports audience was roughly 170 million, already on the aggregate having eclipsed Major League Baseball and the National Hockey League, and starting to rival the global audiences for the NFL and the NBA. But in fact, the other thing that we noticed was that the average revenue per fan that was being extracted out of that audience was still well low at $5 as compared to some of the others. Again, not having had the time to mature or to build out the real meaningful traction around media rights and significant league-driven sponsorship deals. And so it seemed like an arbitrage opportunity for us that we could not miss. I like to include this slide because it speaks to me in my time in the NBA, but as compared to what we're witnessing current present day in the esports space, if you go back and look at the development of the NBA over years, starting with the very formidable years of David Stern in the late 80s and throughout the 90s, there were a number of team transactions that took place at that time. On the low end, the Houston Rockets were sold for about 85 million US. On the high end, the Trailblazers and the Celtics were transacted for more than 100 million. But if you throw out that low and those highs and you normalize for inflation, you get the rough equivalent value of what we paid for just one of the 4 franchises that we hold. So in a world today where the NBA franchise is not worth less than $2 billion in today's economy of traditional sport and NBA basketball, and where our audiences are growing at 5 and 6 times the pace as compared to the NBA at that time, we do feel pretty great about the fact that we own 4 of these franchises in a growing global business. And we're not the only ones that notice this. And in fact, if you go back and look at the progression of investment made by traditional sports holdings over recent years, you will notice that the biggest players in the biggest leagues in the world have not only made investments in esports, but have made investments in the very same franchise leagues that we have at OverActive Media. Robert Kraft and the family attached to the Patriots were in fact the first investors in the Overwatch League out of Boston. Since then, the Cronkies and the Wilpons out of New York, the Anschutz, Ted Leonis and Peter Guber, more recently the Wilf family. Again, these are some of the biggest traditional sports names and ownership groups in the world today. And all of them are not only invested in esport, but rather are invested in the very same league positions that we are, because the business model makes sense to them, because it makes sense that, again, they're invested in what we believe and what they clearly believe is the most sustainable position in the ecosystem today. These franchise leagues that, again, give you a chance to not only build out a local business strategy around your market, but share in the global growth of these leagues and as they're monetized. I was bragging earlier on the team that we built, and it's that team that's delivering world-leading results. And in a space where sponsorship is so very important to the success of any venture in the esports space, our group is doing it better than anybody in the world. In Canada, again, we've got now 10 major partners. Bell was the first to join us as a very significant and founding premium partner. Soon after that, and with Bell's endorsement in the market and in the vertical, we were able to cash in on other deals like Canon and Universal Music, Skip the Dishes, more recently TD Bank, Red Bull, Jack Links. These are all partners of OverActive Media. In Europe, we enjoy similar success. Again, a number of major partners over there where we've applied the very same strategy. Bell not only saw their way fit to make a very significant multi-year, multi-million-dollar investment as our partner, but also saw the potential in the space and in the business model that we had developed at OverActive Media, and so made a very significant $10 million investment as a strategic partner to OverActive in the summer of 2019, and followed that up with another investment in Q1 as part of our go public round. In a private concurrent round, they led the way with another $2 million. So Bell has $12 million invested in OverActive Media as a strategic partner. Our business is one that attracts celebrity, and so true it is for OverActive Media. You would notice that, again, we have a number of those attached to us and others that aren't listed on the screen. The Weekend was, in fact, an early stage investor. Mitch Marner and his group joined us last summer. Others not listed here: Sidney Crosby, Phil Kessel, Carl Hagelin, the Montreal Canadiens are seven-figure investors in OverActive. The two guys on the right, Willie and Vegeta, these are the two biggest Spanish-speaking influencers in the world. And these two gentlemen have a combined 100 million social media followers, which you can imagine is very important to the work that we do in Spain and the Spanish market. The difference between OverActive Media and its investors and most any other, frankly, in the industry today is every one of our celebrity investors have, in fact, written checks. We focus only on those that are interested in an authentic connection to our organization. And again, we only deal with those who are prepared to invest in us. Quickly, just a couple of slides on the progression of our business financially. We started the company in the fall of 2018. 2019 was really a building year. We acquired the team assets that we have and started to build out our operating group. 2020 was meant to be our first full year of operation. Obviously, COVID saw to it that that wasn't going to be the case. But despite that, we delivered almost 66% of our original revenue plan, and provided guidance earlier this year that we would grow that number to north of 12 million. And I'm pleased to report that we are on track to meet that guidance. You can also see the impact of those high margin revenues on our losses as we get started here. Again, we've managed very responsibly our investor and shareholder money, and again have managed to ratchet those losses back aggressively with that high margin revenue model. And then quickly, as I mentioned, we are taking the step into the venue and entertainment space. Again, 7,200 seats in the city of Toronto. When you think about it, you know, the only place that the premium music acts of the world have had to play in this city is the very arena that the Leafs and the Raptors play in, that's conflicted out 100 nights a year. That seems like a market opportunity for us. and we're working every day to make this a reality for our business and expect to have more news to share literally in the next coming days. I started with people, so I'll finish with these fine folks. Sheldon Pollock is our chairman. You might know him as in Canada as a very established entrepreneur and has had a lot of success in the capital markets. He's the sitting chair of the successful offering that is Acuity Ads and a founder of this company. The Kimmel family, more specifically Mike and his brother Jeffrey and his cousin Ryan, are the third generation of that family's wealth. They are a great and very charitable family, really nation builders in Canada. Mike and his brother Jeffrey have started their own hospitality investment company and also are limited shareholders in the Pittsburgh Penguins as well. And then Bell and Rizwan representing the interests of Bell. And so I'll wrap it up there. That might be the fastest I've ever done this presentation, but if I can just leave you with these things. We are a unique and growing industry, but one company that has a very skilled set of operators with experience in the sports, media, and entertainment space that we believe sets us apart from others. And we have a collection of assets, in fact, a unique collection of assets next to others in the space that gives us great promise, not only for very significant discounted cash flows, but high value scarcity of asset that we think will drive enterprise value. So I'll knock it there and take any questions if we have time.
Amazing, Chris. Terrific presentation. Like I said, just a lot of really, really impressive stuff that you guys are working on right now. And a lot of stuff in the pipeline too. I certainly hope we get the chance to talk with you again soon. There's no doubt there's some big things on the horizon. So I'm excited about it. I know we have some questions from our chat. We will dive into those at the end of the day. We're running behind, so we've got to run to the next presentation. But Chris, would love to address some of these back to you. And like I said, definitely talk to you again soon.
Terrific. Thanks for the time today.